Hi and welcome to the Market Alert for Friday, the 5th of February 2021. There is a huge amount to get through today, so it's going to be fast-paced and a bit lively, as they say. So let's start off with the news, and there's a lot of that as well. But the main one, Redditors abandon squeeze, panic buy penny stocks as USD hits 2-month high. That's the US dollar, which we'll come to later as well. As most shorted stocks faded, the most illiquid stocks are suddenly bid, i.e. penny stocks. That's what that's on about. So that's another part of the reason for the market going up yesterday. Now, this is the funniest thing I've seen in a long time. Janet Yellen said she needs to understand deeply the GameStop chaos. This is a woman who was in charge of the Fed for goodness knows how many years, too long, and is now struggling to grasp the concept of a short squeeze. Which I find highly entertaining, as I would imagine that a lot of traders do as well. In fact, I did receive a few text messages from traders that I've been with for nearly 30 years all saying the same thing. It was just highly amusing that this woman is struggling to actually figure out what happened, and yet I had no trouble explaining it to friends when I bumped into them the other day. It's just incredible. So good morning, America. On Thursday, Yellen responsible for overseeing possibly the largest Fed-induced market bubble in history, i.e. the last 13 years of QE printing. We really need to make sure that our financial markets are functioning properly, efficiently, and investors are protected. You've never heard such BS in all your life, have you? You can't make this crap up. But people buy this stuff up. It's just incredible. So this poor scapegoat, from goat to scapegoat, apparently. I don't know whether that's his Reddit handle. Redditor who made millions during GameStop chaos, already being set up to take the fall. As I said in Monday's Market Alert about silver, they will use whatever they can to keep their Ponzi scheme and charade alive, and they will crush anybody and make them the scapegoat. I said this earlier on in the week, and that's precisely what's going to happen here. And that lovely woman, Maxine Waters, confirmed yesterday that he's on a list of hearing witnesses, and regulators in Massachusetts are already looking into potential wrongdoing. Only those at the top can make fortunes. Anybody else upsetting their fortune-making operations will be taken out and made an example of. And that's precisely what's going to happen. As I've said before, that's the way it works. The stock market is broken, but not according to Yellen. And now for all to see. And that's the great thing that's come out about from the short squeeze, is that it's exposed how rotten to the core and manipulated the markets are as well. So it's a good thing, in my opinion, that that's happened. But of course, don't let a good crisis go to waste. Market rips after Romney pitches up to $4,200 handout for kids, and he wants to do this until the age of 6. $4,200 per year. For every child up to the age of 6, as well as $3,000 per year for every child from 6 to 17. Where are they going to get the money from to do this? It's just keep printing it, I suppose. After all, it's printing fresh air money out of fresh air. And Peter Schiff, when Kashkari, he's from the Fed, talks, smart people buy gold. Absolutely. Kashkari knows the government is going to perpetually into debt because the Fed is there to make that possible and keep the Ponzi scheme going. What I said earlier, that's exactly what they will do until they can't service the interest on the debt. And speaking of debt, back to the shores of the UK, Bank of England keeps policy unchanged, tells banks to start preparing for negative rates if necessary, but see spike in inflation. While the committee was clear that it did not wish to send any signal that it intended to set negative bank rates at some point in the future, on balance, it concluded overall that it would be appropriate to start the preparations to provide the capability to do so if necessary in the future. I spoke about this a long time ago, got the timing wrong. I said it would be by December. That didn't happen. However, never believe anything until it's officially denied. And here we see them denying that they just put it in place just in case we decide to go negative. They are going negative, and that's otherwise they wouldn't actually be telling you this. I mean, like I say, don't deny anything until it's officially denied. So, on other things, the market blistered to the upside yesterday on all of that BS that we've just been through, and this sent the implied volatility down to 16.28 from 17.37 the day before. was asked a question yesterday about why I use the Dow implied volatility, and the reason being because it's a limited number of stocks, it gives the better indicator of when the correction is likely to come. And when it happens in the Dow, it happens across all of the board. And of course, the S&P is the main player for the big traders, but the Dow implied volatility is the best one. And this is something that goes back to 1994. So it sort of gives the heads up for all of the other stock markets as well. So that's the reason why I use the Dow volatility. It just there's a lot more of a better performing indicator for predicting the corrections, etc. So again, you can see now the Dow's closed above the 20 bar moving average, which has sent the indicator back to green. Just scroll up here, you'll see prices back above that 20 bar moving average there. And news, while I'm here, what have we got? Of course, it's Friday, and that means that first off, we've got Bailey speaking again, probably denying that we are going to go negative after he said we were going to go negative yesterday. And we've got the non-farm payrolls, the biggie, as it were. This to show an increase in jobs created, which we saw yesterday as well. There was less on the jobless claims first time for a while, which you'd expect because they're not locked down in America as we are here in the UK at the moment. And in fact, spikes in their well, there is no spike in infections after the WHO told them to change the cycle rate on the PCR test, and they've dropped 20%. Well, what a surprise. Anyway, that's a different subject. So let's have a look at the stock markets. We'll start off with the German DAX. Again, you can see yesterday that the market came back to that 89.78 at the 43 level, and it managed to drive through that for the rest of the day, and then also had a bit of resistance at the 89% on the upside. Also managed to close above that, and now we're heading back to the all-time high today. If we only need is the non-farm payroll figures to be good. Another senator to say, yes, I agree, we should print 4,000 for each child from the age of 0 to 6, etc. And that will be enough to keep the markets moving to the upside. So here we can see immediately that we've got, I'll just drag this over a bit so you can see that. So I'd be inclined to actually put the 143 on the intraday chart. And I've already got this line here that I moved up yesterday afternoon for the 89%. So let me just remind my brain that it's 143. So 14134, sorry, which is going to be up here by this here somewhere and around this. And there's 43. So there's the all-time high. So anything happens in the pre-markets this morning or the main part of the morning, once the cash market opens, we'll be able to see where prices are at the all-time high without going back to the daily chart. So let's have a look at overnight, see where the market has been trading. So we're above the DP, above the 200 there, also above the high, which I'd like to keep above the high. So for me, it's long all the way back to the all-time high, because that's going to be great to finish the weekend off. Great for the press, great for the news, and great for investors, as I say, to keep the charade alive that everything is fine in stock market land, as we can see there. In the Dow, also, I can find it, be this one then. The Dow also heading back to the high. I don't think that's the all-time high. Let's just have a look at the weekly charts. I think it is actually, so let me... Yeah, it is. There's the all-time high there of 31,287, and that's a piece of cake to get up to that level for the Dow in one session. You only have to look at the size of these bars from this week to see that that's the case, and also yesterday as well. So back to the all-time highs. If the non-farm payroll numbers are really good. Okay, let's have a look at... I'll tell you what, I'm going to do it a bit differently today. Let's have a look at silver. And you can see yesterday the market bouncing off the 20 bar moving average. But I'm just going to shoot through to this chart here. This is silver 5 minute yesterday. which I've had running on another screen next to me. And I was fascinated by how much volume there was once we had the unemployment claims, which came out better than forecast. And if you watch this, you can see they'd sent the market down, and I'm switching back and forth to different. This is what I was after, different time frames there. And it's this volume, all of a sudden it starts to increase, and just watch this at the 26 level. They had to spike down to it, and we see them buying back in at $26 an ounce for silver. I tell you what, I wish I could buy it at $26. Yesterday it was £46 an ounce on some of the bullion dealers. Massive premium for the cash, because there's no physical about. Which obviously isn't reflected in this, where there's this massive disconnect between the paper and the real market. But you can see how important it was to buy back at $26 per ounce yesterday. And this sent the market moving to the upside, which it didn't last, and then they brought it back. So it was interesting to see. And the reason I'm telling you this is there's a major support at the moment at that $26 per ounce level for the silver market at the moment. So you can see there, let's just cut off there, that we've got this support here. So let me just go back to the 5 minutes, and this is the overnight, and you can see the markets moved higher. Again, they did it once more here. Obviously overnight they sent the market lower, and again you can see them bringing it back. So this is a very important level for the silver price as far as the paper market is concerned at the moment, for anybody that's got spread bet positions on. So it's $26 per ounce is a very interesting level. Now again, it depends on the non-farm payroll figures today. 1:30 the COMEX used to be the official open of the pit trading session all those years ago, when markets were freer than they are now, and not as manipulated. So we could see another retest of the 26 level, because any positive news for the stock market and the dollar is going to send the silver market back to the downside, irrespective of the fact that there is a shortage of industrial physical metals at this point in time, and also of bullion. Okay, so that will do it for the silver market. I'm just going to run through very quickly what happened yesterday in the stock markets. And as I mentioned yesterday, we were likely to go back to the DP and to the 200 MA, because that's how it's worked for the last 13 years. And there we see the markets opening. And also, as I mentioned yesterday, and I always mention in the market alert, is get the market above the previous day's high and we can continue to move to the upside. We've just got to do it convincingly. That's the trick. So already you can see in the futures market, prices were brought back here at a 78% retracement. And I'm just going to wind this back, see if I can show you where the low was. There's the low. From this high down to here with 78% retracement. You can see them buying in there. And then this was the low for the market. And here on the kickoff, we've got 200 MA below, 20 above, 5 above. We've got the market trading above the 43 level here that we had in the daily chart yesterday as well. So the market coming through here and then driving through, massive volume here, and then we got some profit taking as shorts were taken out at this BRN, and we then see the prices moving higher, and then a bit of profit taking coming into the market. But the key here, you don't need a signal, you just need to know that the 20 bar is below the 20, sorry, the 200 below the 20, 20 below the 5, closing above that resistance in the fib number in the daily chart, and also closing above the DP. Prices need to drive through resistance. We've got resistance to the left, and we have this BRN, big round number. Prices drive through this, and you're going to get some profit taking as or stops are taken out, and this is going to cause a bit of selling in the market there. So prices then consolidate, and then they get into a bit of a sideways move of consolidation before driving through and heading above the highs. Now this is a very interesting bar here, because you've got this massive selling pressure, and what happened in this bar, it just shot up out of nowhere I actually bought as it was trading sideways, because we were stuck in this sideways move, closing above the 5-bar moving average. And everything was fine and dandy. And I saw this and I thought, well, it'll just come back down to the BRN hold, and then we can get up to the R1, which is the 89% in the daily chart. However, what I thought and what happened are two different things, because the market then decided to come back and it drifted down nice and steady. And here you'll see that they bought back at this point and then again moved the market back up through the high and then the BRN before it ran out of steam at 78% of this move. So prices then sideways, and then they drifted back through the high. We see the 5-bar go below the 20-bar. We've got the resistance here, we've got the high there that's failing, and the prices then move lower. They find a bit of support at the close. They actually retest at 89% as well of this low to this high, which is here. You can see them finding a bit of support, but eventually this is broken as well as prices come back towards the 20-bar, back towards the high. Notice the volume in this bar as well is higher than the previous bar, the range less. The high has become a resistance, and prices then close back below the 5-bar and the 20-bar and drift lower, as you'll see there. I can get that back, and then they continue that way through to the end of the morning session. Then at lunchtime, I had a look at the claims, and they came out better than forecast. And then also noticed as well that the 39 on the upside now was really important. We'd had the 43, so now we're going up to 039, and the market back to the high after the good news of the jobless claims, then trades sideways back to the 200 as it waits for the Dow, tests at the 200, they buy back, and again you can see here we've got a bit of a battle going on initially, but that 200 bar moving average you can see is a bit like a magnet. Prices hold, they come back to the close, and then they're free to move back to the upside there as the volume drops off, as the selling disappears from this battle that was going on initially. And then prices follow the Dow. As the Dow rockets to the upside, we get some selling coming straight back into the market here as it drove through this BRN. But nonetheless, the market then found support at that BRN, which is what I was hoping it was going to do in the morning when I caught that spike to the upside, which it didn't. But on this occasion, it did. You'll see there, that's what I was hoping it was going to do when it went through the high, as I say, in that morning session. Then find support here like it did here, test it, and then move to the upside. And here I've got the 89% from the daily chart, just to see where prices are going to trade to. And even though we have a bit of selling here, we've definitely got some selling there, the market fails to close below the 5-bar moving average, which is the measurement or the tool for measuring momentum that I use. We then stop at this BRN, and we've got some selling pressure here because the volume is greater than the previous bar and the range is less. Sorry, selling pressure there. And we can then see prices attempting to move to the upside, and you can see we're clear now. And I also drew in the high here, which unfortunately is a bit of a mishmash there, just to see if the market would clear, and it did, and then continued for a moment or two, but then found some selling. You see the increase in volume there as prices came back down to the 89% of the daily chart, that black line, the fib, and you can see how that now becomes a magnet for the market, and prices move eventually off this up to 78%, and then through the 89 and back to the high. Just bring that back. There you go, back through and to the recent high to the left there. Okay, that sums up yesterday's activity and what to expect today. I'm sorry it's so long, but there's just so much going on at the moment to actually add into here. So if you've made it this far, thank you for sticking with me. And as it's Friday, have a great weekend. And if there is anything else to report, I will let you know. But very much appreciate it. And thanks for watching. See you in the next one.